Hi, good morning. It's Ross McInnes from Australian Investment Research Services. Thanks for joining us. It's Thursday morning at 8:30 a.m. Sydney time on June 24th. Interesting day ahead after the US FOMC last night basically suggested that the US economy is starting to move into a stalemate position. They noted that the European crisis had started to modify the beneficial financial markets attitudes that were involved over the last 12 months. And that the market had corrected pretty heavily. And adding to this was the fact that the US new home sales data for May imploded by 32% on an annualised basis. Now this looked a lot worse than it actually was because the US does, as we said, analyse those numbers. So the 12-month, it sort of does a 12-month fall on the monthly adjustment. But again, what it shows is that post the April 30 government grant that the US housing market's fallen into a bit of a hole. And this is likely to be the theme, as per Obama's comments on Tuesday night, that the US may have to move back to bring back some more monetary policy via housing and also cash for clunker style programs that they had last year in the auto industry. So it's definitely something to watch, and US jobless claims tonight will again be a big focus given that they have stopped improving over the last 3 months. In terms of the morning, the focus at 9 o'clock this morning, Sydney time, which is about 25 minutes from my presentation, will be on the surprise leadership poll ballot for the Australian government. Prime Minister Rudd has come under increasing fire after dropping the carbon trading scheme and also the resources tax, which was introduced back on May 2nd. His deputy, Julia Gilard, seen as having the numbers this morning, and this is obviously a big focus for both equities and the Australian dollar. In terms of that, the Australian dollar range traded last night between 86.60 support and this morning's around 87.40. If Gilard does win, we'll probably see the Aussie flick up to 87.80 with the focus on whether they rescind the resources tax, delay it, or modify it to a great extent, given it has been proven so unpopular, and we've seen an unprecedented reaction by the Australian mining industry in terms of advertising against that tax, which has now been going on for about a month. For the Australian equity market, yesterday closed down at 10-day lows just below 4,500, got down to 44.48 area last night, and at the moment it's trading at 44.80. Or closed in around 44.80. So in the bigger picture, this recovery rally that we've been had for the last 16 months remains under a little bit of more pressure. The European shock in May sort of tried to derail it. The markets have come back to that breakout point on Monday when the Chinese deregulated their currency market. But now the negativism's moved to whether the US economy can demonstrate better growth than just falling back down to mediocre levels below 2%. So, interesting period ahead. We've got the G20 on the weekend, which again is going to have to find out how we're going to sustain the growth with the Europeans very focused on the austerity measures with their budget, and the US countervailing this, saying that we need to keep the growth going. So, interesting 3 or 4 days ahead. Thanks very much for your time, and we'll speak later.